in the financial industry, especially for the IPOs, for about 3 years in China, and I have 1 year in the US in terms of the capital raising. And some fun effects of the IPOs is that, so we know that a company's valuation is, we evaluate the entire company's the value of the entire company. But actually, in the IPO structures, the iBankers only issue, the company only issues about 25%, 10 to 25% of their stocks in the, into the public trade. So it's actually, there is a strong amplified effect because the insider only needs to control this about 8% of the share price. They can manipulate the entire company's valuation. So this is one of the tricks that those insiders, how those insiders control their company's valuations, because they can use a very little cost to control the valuation. So this is the like a pie chart. The 75% of the stock are actually not public trading. Only 25% of them are public trading. And into this 25% of the public trading stocks, only about 20 to 30% stock are actually actively traded every day. It's called daily trade volume. And now we know the structure of the IPOs, how those bad guys can manipulate their stock price. One of the common methods is called batch trading or wash trading. It's a kind of terminology, but it's very simple to understand because one of the insiders asks two friends of them. Friend number one, buy the stock at a higher price. Friend number two, sell the stock at a higher price. Because the stock price in the market is determined by the demand and the supply of the stock price is determined by the demand and the supply of in the market in every second. So let me draw a chart for that. So in every second, if somebody just sell and buy the stock price in an increment level, the stock price automatically going up. And that's how those insiders control the stock price and making it increase. And how they can make profit in terms when the stock price going up, they mainly do two things. The first is to attract a retail investor to buy and hold those buy those stocks at a higher price. They sell their stock at this price, and those retail investors just buy in. And in China, we call it 韭菜. Okay, and even though some of the insiders they have limitation when they are going to sell their stock, they can still benefit from the increasement of the market value because they can do more financing by lending their stocks to the bank and borrow the money based on their stock collateral. Also, they can issue more stock to the market because the stock can issue at a higher price. They can still gain a lot of profits. So that's how the real world that those insiders in the company are making illegal profit when the company goes IPOs and manipulate their stocks. And some key takeaway from the real world lessons is that just do not buy and sell the stock just based on the news. You gotta have some basic understanding of the company. And it's better for us to do some sensitivity analysis. Yeah. So this is my presentation.